year. Why, thank you, Christine. So as I'm going to review the customer deposits and actually closing periods. You're used to doing this on a month-by-month basis, and it's handled a little bit differently, and we're just going to go over that particular process. So the first thing we'll take a look at is the bank reconciliation. We're going back to our old original one that we'll be using also for the employee templates. But the bank reconciliation in terms of the process is the same in Classic. I mean, you go in and you mark your cleared checks and cleared deposits and print out a report of outstanding deposits, a bank rec report, and a cleared transaction report. But obviously the interface is much different. So going into the bank rec, I'm doing a bank rec, and the ending bank statement balance is $50,628.28. And so when we go next, I have gone in and already just have marked these particular transactions cleared this month for both checks and deposits. You can look at it just the deposits or just the checks, or you can look at everything. So those are the things that have been marked as cleared. And so these are the items that are still outstanding going forward into the next month. So once you've marked all those items cleared, and just FYI, quite often when you're looking through the bank statement, there'll be some bank charge that's on the bank statement, but you didn't get it entered into the system. This add new transaction is a way you can go in and add that, deduct, what they remove. Usually it's a bank service charge or something to that effect, or maybe you have an interest-bearing checking account and you need to add a interest deposit. Then you can click on this add new transaction and add it normally. When you click done, it'll show up as an outstanding and you can mark that cleared. So once you've done that process, then it takes you to here. And so it has to be balanced to zero. Now, a feature that we've had, and it's been used for years, is to save the export file. And in this case, it would save an RTF or a Word document file for both the bank reconciliation and the clear transactions report, so that you can go back and review those. But there's a newer feature where this can be deactivated and you can look at the cleared transaction history report, which I'll show you here in a bit. But normally what you're going to do is you'll review the outstanding deposits and outstanding checks and make sure everything is reconciled. If you want the clear transaction report, then you would click here, and that would list all the transactions that you've cleared. So those are basically the same things that you've had in Classic. So when everything's in balance, then you can go ahead and click Finish. And we're not going to export it, but we're just going to click Finish. And if you go back into here and go to History Reconciliation Reports, and why I wanted to point this out today is you're not going to have this history in your converted data. This is only going to get built on bank recs that you do in the upgrade. So we have it done, but you would pick which bank account you're going to use, the statement date, and then you can go ahead and you could see we did the 9/23. So if we wanted to go back and look at last month's bank rec, again, if you were using People's Choice Desktop in that previous month, then you can go ahead and reprint the bank rec and the clear transactions report. So just a little one that's had a lot of history. If you go into here and you do history report and click print, and then if you have multiple bank accounts, pick a bank account, And then you got all this history that you can go back and reprint the bank reconciliation report and the clear transaction report. But again, this table and listing is only bank recs that you've done since you've converted to the upgrade. It's not going to be available in your converted data. So those are the main things I wanted to show you as it relates to the bank rec. Otherwise, it's pretty straightforward. And sometime next year, we're hopefully going to be adding where you can download your transactions from your internet banking and actually import them in. And so you don't have to do a lot of re-entry, especially if you're doing a lot of online type of transactions. So the next thing I'm going to jump into is this overview of vacation and holiday. I'm just going to do not all of them because some of you would maybe just want vacation and sick pay. Some may just want personal pay, and personal pay, whenever that's set up, quite often covers sick pay and vacation. They don't make a distinction. It's just personal time off, and whether you want to call it a vacation or you're taking personal time off for sick. That's what some businesses have been going to, but you can have both as well as the holiday. Now, the thing to keep in mind, there's really two levels of that tracking. There's a pay types that we can set up for each of these, and that's mainly for the purpose of tracking internally for your own use. The dollars, you can print the report of the dollars and hours of vacation that you've issued or sick pay or whatever. So you have a cost standpoint. I mean, it's the total still gets added to the W-2 total. But if you make that distinction, whether it was regular pay, overtime pay, as opposed to what you did for vacation pay. And then the other side of it is tracking the amount of vacation pay or personal pay available, tracked in hours. And we'll cover both of those things. And I'm going to do it in a manner where this is something you want to mimic if you're going to issue it starting next year. So what you would do, we'll jump back to our, is obviously this would be done in payroll. And so the strategy here is to go back to those employee templates that we covered in our earlier sessions and to add those items to the template and then using that to add them to the payroll. So for instance, our example before was this business decided to open up an office in Maine, and which has state tax, and so we were going to offer vacation and so forth there, but we decided to backtrack and offer it here. So what I've done one with Julie Baker where we've added that vacation pay type to their template, so it'd be available when you're doing the payroll. But I haven't done it with everybody because what I did, and this is what you could be doing if this is something you're going to do, is we go into the employee templates. And as you recall, we created two hourly. We decided to be bi-weekly in Maine, but we're remaining as weekly in New Hampshire. So what I'm doing is going into the New Hampshire template, go into the pay, and in that we've added the vacation pay, but I'm going to go ahead and say we're also going to add holiday pay. Here's our, we'll just use sick pay. And okay. And our default wage, we'll just say it's 15. This is something that you'd be changing depending on wages. Here we go. There we go. So, and you could have it not enabled or enabled whenever you bring it over there. I'm going to go ahead and say it's enabled. And so we've added this to the template. So now when we go into here, we see vacation pay, sick pay. But if we go in, and I'm just going to show another employee. So Lisa, I have it updated here, and we'll see Lisa's. She just has the regular. She doesn't have it yet, but now we're going to add what we've done to the template to here. So we'll go into our template. We'll go into the hourly paid weekly, and we say add to existing employee. And so you would select the employee. In this case, it's Lisa. We click process. And so at that point, we could do this with each of the employees. But then when you go back to and look at Lisa's, you can look at her pay, and you can see that those automatically got added. Now you'll still at that point in time need to go in and, what is their hourly rate? And in this person's case, she gets paid $31 an hour. So you'd want to go in and change this to 31 and the vacation to 31. And again, it's not active at this point. We could have made it active, but if you're going to go ahead, you want to make sure it's active so that when you go in to do the payroll, it's available in your drop-down list. So instead of selecting hourly weekly, you would select either hourly sick pay or hourly vacation pay. And so that's how you would go ahead and add additional pay types, but instead of going into each employee and adding vacation and adding sick, and then going into the employee and adding vacation, adding sick, each time we can at this point just go to our updated template, and yeah, we still have to do it to each employee, but we can just go down the list and select the employees and update them, and then go in and fill in the hourly rate. So the same thing can be done as it relates to the vacation, where you're tracking the number of hours available. So in terms of what we're going to be worried about is, let's say the sick pay. We're not going to accrue it. Most of our users don't do the accrual feature. What the accrual feature is allows you to do is it will calculate, okay, they get this, if your default is 24 hours per year, it will calculate it on a case by, so for every hour worked, it will add X number of hours to their amount available. And when you don't accrue, and this is what most, it depends on when you have those raises. Some people have raises at the first of the year. Some people have raises on their anniversary date. And part of the anniversary date may be an increase in the number of vacation or sick hours that are available. So, I mean, those internal policies kind of dictate how you're going to use this going forward. So let's just say this particular individual, or we're going to say the default starting units. Now, again, like the updating the paid sick pay and paid vacation pay, where you put in their hourly rate. If we're just going to have the default starting units be 40 hours a year, that's what's going to get added to the employee when you implement this. But then at the beginning of the year, you would go in and, if that particular, update each individual employee with the number of hours that they might receive. So, and then some have a policy of a carry forward. So if you can only carry forward, let's say 5 hours or 4 hours, or maybe you can't carry over anything. So that's why a lot of people take vacation pay at the end of the year, because it's a use it or lose it kind of thing. So you would do the same thing on that, so that when you would go, I think I did add that to them. So when you update, again, you could update each employee individually, but then what you're going to plan to do at that point, and you're probably going to start it as of the beginning of the year, is you would go in and pull up each employee, go into the vacation, and you're just tracking paid sick hours. So you maybe want to show that on the check stub. It's for Julie Baker, and maybe Julie Baker's been there since what we see 2015. So she actually gets, let's say, 48 hours a year. And so we're starting out the beginning of the year with the 48 hours. And then as we use them, it will subtract them here, and then the total remaining units. And then that's what's going to show up on their pay stub whenever they go through. And you can do the same thing with the vacation hours. They show on pay stub. You don't want to, if you're not going to do this, you want to make sure that each of these are not checked if you're not going to show them on the pay stub. So, and then just to review how that's being used, we did touch upon it before, but when you go to run a payroll, and we'll just say, well, we'll do a recount here. If you were, so we have our payroll here. So let's just say Julie is going to take some vacation time, and she's just going to take 4 hours, half a day. And so we'll adjust this just so we'll make this 0, and we'll make this 36. Now, if you add a new line like I just did, if you click done and then go back in, it'll resort alphabetically, so all our pay types are the same. And so then when you would go and calculate, you would do your usual, review the calc report, make sure everything looks correct. Go ahead and do any edits if you need to, or if you saw a mistake, recalculate and get to the point. But then when you're ready to create checks, then you go into the vacation pay, and you would pull up the vacation hours, and you would pull them up for Julie, and you would say she used 4. And so that's going to subtract 4 from the 48 that she had available, and then you go ahead and create the checks. But then the amount of vacation available will be printed on their pay stub. So that was, like I said, we had talked about the employee template before, but I thought it would be good to review it if you are planning on implementing that. And that's why I was alluding to maybe you want to convert in the first part of December and go through this process and get everybody ready. You don't have to use it until the first of the year, but at least it's all ready to the first of the year. And then, like I mentioned earlier, if you did convert early December, you would be able and then finished out the year in the upgrade. Or you could still run side by side if you want, if you decide you want to stay live with the original one. But then you'd be able to do W-2s and 1099s within the program based on the things that we had covered here, and doing W-2s and 941 form. So that's the process that I wanted to cover into that. And maybe if you have any questions, we'll cover that. The other thing I wanted to cover, just going back to our agenda, is the customer deposits and closing the financial period. For the customer deposits, I'm going to use our demo that has accounts receivable in it. And this is a very short one. So for those who don't use accounts receivable, just bear with me here. But let's say we're going to go to Jack's greenhouse, and they don't have any invoice, but they're going to order something of substantial amount, and we like to have a deposit before we order it and have it shipped to them. So when they came in and it just said, well, we need a deposit, so they wrote out a check or however they made the deposit, uh, check number, and they made a $500 deposit, let's say. And so there's no invoice to apply it to, but so you would just click customer deposit. And so that creates a credit memo that gives them a credit of $500. And so the way this is used then is we'll just go in and we'll just select Jack's Greenhouse. And this was at a later date, we'll just say, but so they ordered we'll just say 50 of the Gidgets with Gadgets. And so they had a $5,000 purchase. And so what we can do here is we can apply it here, but or I'd prefer to show you that when we go to here and pull up Jack's Greenhouse, you'll see the $5,000 invoice here, but they have a $500 credit. And so what we will do is apply the credit. It shows that we're going to auto allocate that. So that $500, and then we're going to apply the credit. And so now their credit's been applied. If you go down to the invoice, you can see that the $500 got applied. And so the amount due is $4,500. And so if you were going to generate an invoice, then it's going to show the invoice of what was purchased. It's going to show the credit that was applied, and it's at $4,500. So, and we can have multiple credits. What I've run into before is they work with a business that orders a bunch of things, but they have to give a deposit on each thing that they order. So you could have multiple credit memos. And if you have multiple credit memos, when that list pops up, it'll have each individual credit memo. And so you could tie a particular credit memo to a particular invoice if you're managing multiple deposits on one customer. So the other item that I mentioned on the list was to close out months and close out the year. So that's done in the accounting module, and it's done under financial periods. So the way most people use the system is they have every period open, during the course of the year. And they don't bother to close, because once you close a period in the upgrade, you can't go back and add transactions to that period. But you can go ahead and open up a new year. So what we hadn't closed out last year yet, I went ahead and closed some months. And the process of closing the months during the year, and again, not everybody does it, but those who do it are more likely to be in the full accounting, and they want to be GAAP compliant. And so once they produce financial statements, they want to make sure no new transactions get posted to that period. Well, when you close a period in People's Choice desktop, you can't post to that period anymore. And you can't unclose it. I mean, we can do it through support to unclose months, but it's designed to not be unclosed on a normal basis. And if you close out the last year, which we'll do here in a second, that is it's a point of no return. I mean, you're done for the year. But for those of you that get audited, you can go ahead and not, keep periods open from last year, and you can go in, because quite often if you're audited and you're doing full accounting, the accountant's going to want to do a journal entry for that last period in December before you actually close out and advance to the new year. Now, for those of you who are using this strictly as a bookkeeping system, And just to give totals to the accountant to prepare your taxes, you never have to close a year. You do have to create a new year, like when you start out January, you can go in and you'd say new common periods. Typically, you're just copying the previous year's periods. And so then it opens up everything for 2025. And you can start operating in 2025, even though all your periods in 2024 at this point are still open. And you can leave them open until, like I said, the audit's completed, and then you can come back and you can finish closing out a particular fiscal year. So to close out like October, we just hit close. Yes. Close. Yes. Now here's where you're in the last period of the year. And so this is what's going to take your profit and loss and post it to retained earnings if you're managing a full general ledger. And so when you go to close the last period of your year, in this case it's a calendar year, but if you were on a fiscal year and your year ended in June, the same process would end when you go to close out the final period. So it's telling you what I just described to you and what you should do before you continue. But I'm going to say yes. And then we say, what's your retained earnings account? We click OK. And then it's giving you one last chance. Most people will back up. And if I say yes, it's going to go to the backup screen. I usually give it an indication that in the file name, I use say before close, before closing 2023. So we know we can always go back and pull that back up and restore things to what they were exactly like when we closed the books. But I'm going to say no. And it's just giving me one more warning. So I'm going to say yes. And it goes through the process. And now 2023 is now closed. And part of that close, like I said, it's going to take your profit and loss and post it to your retained earnings account, but it's also going to clear out your beginning balances. Up until you close that year, if you did a general ledger report, or if you went back to analyze accounts and you hadn't closed a year, that beginning balance that's going to show up this is going to be the figure, but until you close out the year, this beginning balance is going to be the beginning balance as the previous year. So so if you're doing a general ledger report at this point in time in the new year, that beginning balance should always be zero for your revenue and your expense accounts. Now your balance sheet accounts don't change. So anyway, it's a little bit different in how it's handled in Classic. Again, if you're just using it as payroll only or just a checkbook and you're given totals, you'd never have to close. You only have to create new years and new periods for each new year. But I know I've gotten the one disadvantage of if you're using accounts receivable or accounts payable of not closing is if you want to archive data, it only allows you to archive data in closed periods. And so I've had people that wanted to archive, and the last 10 years I go through there and it's never been closed. And so that's one reason maybe you do want to close if you would ever want to archive your data. Again, most people don't archive unless they have a large accounts receivable, accounts payable transactions to where they just have so many transactions they want to get rid of those that are 5 years and older, that type of thing. Others never convert or archive because they may want to go back and look up if they provide warranties or guarantees for a long period of time. They want to be able to go back and pull up that customer and that purchase from 8 years ago. And maybe you've recorded a serial number that helps them qualify for a warranty or those kinds of situations. So those are the main things I wanted to cover today. We got most of that covered in 36 minutes. Um, as I mentioned, if there's some things that people would like us to recover, some of these things that are on the list, I mean, that we've touched upon most of these things during the course of the past few weeks. But maybe there's some things that you would like to review again, or we didn't cover it in as enough detail. But there's these lists from the accounting standpoint, from the accounts receivable standpoint. So accounting, oh yeah, if you wanted to, we've done quite a bit of review in modifying the templates. We did set up direct deposit. There was a separate video that was included on setting up direct deposit. And we've done a fair amount of different payroll reports over the past few weeks. But if there's some things that you're still kind of like, well, how do I do this? Now is a good time to bring that up. And then some of the things that we'd also covered, creating a new bank account, setting up to print a blank check stock. We just did some on reconciling. We did cover a little bit on recurring payments, how to create checks, setting up suppliers for 1099 processing, and doing the deposit. So is there any of these particular items that you would like to have do a little bit more elaboration on? And I'll be glad to dive into it further. Otherwise, does it look like we're getting a bunch of people asking questions? So that must mean I've been covering everything pretty thoroughly. uh, so just as a reminder, next week will be the last class, but we will be reopening. We'll be doing some webinars that you'll be notified. But next week we'll focus more on the getting ready for year end. We'll probably do a little on the W-2 1099, or if there's some follow-up there between now and next week. But next week class is kind of open-ended. I'm going to wait for feedback. And if there's any feedback for some particular topics, they'll get added in. And I'll have that on the list when I send out the recording that Christine was alert enough to get started. So fortunately, the part of this session was more on the housekeeping end of things and not so much in the review of things. So if there's no other questions, I'm going to go ahead and stop the recording. And I think you're recording it, Christine. Because I'm not able to stop it. So